Have you ever wondered why some people seem to get approved for better credit cards, lower interest rates, and bigger loans, while others keep getting rejected? The answer often comes down to one thing: their credit score. The good news is that improving your credit score isn't as difficult as many people think. You don't need expensive credit repair companies, secret tricks, or financial experts. In fact, a few simple habits can make a huge difference over time. And those habits could save you thousands of dollars in interest and help you unlock better financial opportunities. In today's video, I'll show you 7 proven tips that can help you improve your credit score faster, explain why they work, and show you how to start using them today. Let's get started. Tip number 1. Always pay your bills on time. This is the single most important habit for building a strong credit score. Lenders want to know whether they can trust you to repay borrowed money. Even one late payment can send the wrong signal and may stay on your credit report for years. If you're worried about forgetting a payment, set up automatic payments or create reminders on your phone. A few seconds of planning each month can protect your credit for years. Now let's move to tip number 2. Keep your credit utilization low. This simply means using only a small portion of your available credit. For example, if your credit card has a limit of $1,000, try to keep your balance below $300 whenever possible. Using most of your available credit can make lenders think you're depending too much on borrowed money. Keeping your balances low shows that you're managing credit responsibly. Tip number 3. Don't apply for several credit cards or loans within a short period of time. Every application can create what's called a hard inquiry. 1 or 2 hard inquiries usually aren't a problem, but too many applications in a short period may temporarily lower your credit score and make lenders more cautious. Before applying for new credit, ask yourself one simple question: do I really need it right now? If the answer is no, waiting can often be the smarter decision. Now let's talk about tip number 4. Check your credit report regularly. Many people don't check their credit report until they're applying for a loan, a mortgage, or a new credit card. Unfortunately, that's often too late. Credit reports can sometimes contain errors, outdated information, or even accounts that don't belong to you. A small mistake on your credit report could lower your credit score without you even realizing it. That's why it's a smart habit to review your credit report on a regular basis. If you notice inaccurate information, report it as soon as possible. Correcting an error could improve your credit profile and help you avoid unnecessary problems in the future. Now let's move to tip number 5. Keep your oldest credit accounts open whenever possible. The age of your credit history is another important factor that affects your credit score. Many people close old credit cards because they no longer use them. While that might seem like a good idea, it can actually reduce the average age of your credit history. Lenders generally like to see a long and stable credit history because it shows you've managed credit responsibly over time. If your oldest credit card doesn't charge an annual fee, keeping it open could be a simple way to strengthen your credit profile. Even if you only use it occasionally for a small purchase and pay it off right away, it can continue working in your favor. Now here's tip number 6. Pay more than the minimum payment whenever possible. Making only the minimum payment might keep your account in good standing, but it can also keep you in debt much longer. You'll usually pay much more in interest over time, and your balance will decrease very slowly. Whenever your budget allows, pay a little extra. Even an extra $25 or $50 each month can help reduce your balance faster and save money on interest in the long run. Lower balances also improve your credit utilization, which is another positive signal for your credit score. And finally, tip number 7. Be patient and stay consistent. This is the step that many people underestimate. Everyone wants quick results, but building a strong credit score takes time. There isn't a magic trick that will increase your score overnight. Instead, your credit score improves through consistent positive habits, repeated month after month. Every bill you pay on time, every balance you keep low, and every smart financial decision helps build a stronger financial future. Think of your credit score like planting a tree. You won't see huge growth after one day. But if you continue taking care of it, the results become more impressive over time. Let's quickly recap. Always pay your bills on time. Keep your credit utilization below 30% whenever possible. Avoid applying for unnecessary credit accounts. Review your credit report regularly. Keep your oldest accounts open. Pay more than the minimum whenever you can. And above all, stay patient and stay consistent. These 7 simple habits can help you build a healthier credit score, qualify for better financial opportunities, and potentially save thousands of dollars throughout your lifetime. Remember, Improving your credit score isn't about finding shortcuts. It's about making smart financial decisions consistently and allowing those good habits to work in your favor. If you found this video helpful, subscribe for more easy-to-understand personal finance videos that can help you save money, build stronger credit, and make smarter financial decisions. Thanks for watching, and I'll see you in the next video.